All right, here is the classic SD Radar Futures day workspace, which you're all familiar with if you are trading futures. Even if you're not day trading futures but swing trading, the swing and Excel swing workspaces look almost identical. There are variants for larger screens with 6 different charts instead of 4 here, but lastly the layout is the same on all of them. We do have a radar screen over here that includes symbol rows for all of the different future markets that we trade. When I send out these workspaces, I include 18 different markets, as you'll see here, which are the markets I trade. Different users add different markets they trade themselves, or they remove some that they don't trade that I have included. That's all up to you, of course. What is common in all of them is that for each market, in this case the S&P 500, the ES, the NASDAQ 100, the NQ, and so forth, for each of them we have multiple symbol rows for each of the intervals for which we want to scan for zones. So in this case, in the day trading workspace, 3, 5, 10, 15, 20, and 30 minute symbol rows, and the same in all of these different markets. So largely that's the core of SD zones and these workspaces that allows you to scan for demand zones and supply zones in all these different markets and alert you or show you where the zones are, so you can jump straight to them instead of looking through one chart after another to find them. Then whenever you click one, let's say we click the ES here, whenever you click one of these symbol rows, these charts will then update, of course. In this workspace, we have a 3-minute and a 5-minute and a 10-minute and a 50-minute chart. These are the entry charts, and these charts show the entry zones, such as the ones down here. This 5-minute entry zone that worked so fine earlier today, and also this particular one, which I'll cover in a little bit. So on this workspace, we have 4 different entry charts. We also, in all of them, have 2 different high time frame charts to help you gauge the big picture and determine which direction should you actually trade. Here we have a 60-minute entry chart, which you would change to fit the entry zone you are looking for. We also have a fixed daily entry chart, daily high time frame chart, so that you can always keep an eye on what is this market doing overall. And this actually is a very good idea why to do that, because see how we broke through this and we now have plenty of room below here, a pocket or nothing. So that's a good reason to be watchful, and a good reason to pay attention to this particular chart. These workspaces have looked like this for years. So again, if you are trading futures or have been trading futures with SD zones, you should be familiar with them. Let me just briefly show you the best trades from this morning, which will be a way to illustrate how these workspaces and SD zones works for those who are new to it, and for those of you who are experienced, there'll be a couple of little trading lessons involved in that. First I want to show you is this 5-minute ES that we pointed to before. Not this one down here that works so great, but the one that was formed that happened this morning. It's this one down here. It was formed during the European session around 4 or 5 o'clock, and then price was dancing above it during this time, and then it finally filled about 8:10, so it's about 20 minutes before the CPI report that came out 8:30 Eastern time. That was what caused this pop right here. So can you trade this close to a report? Yeah, you can, as long as it's not overly close, as long as there's enough time that either the trade stops out before the report, so you get a comfortable stop out without a lot of slippage, or it goes your way and you're able to lock in a little profit. Let me just stretch this, you can better see it, and you're able to lock in a little profit so that and tighten your stop. That's important, so that by the time the report comes, either if it does go against you, well, it'll just stop you out on that tightened stop plus some slippage, you have to pay that, or you make $1 million, which that's, as it turned out, was what happened in this case here. So that's really key, that had we been closer to the report, let's say this had been 5-10 minutes before, you'd have had to cancel these orders, because you would have risked it filled on the report, and you could have had real crazy volatility that would have given you not only a stop out but a lot of slippage. You don't want to pay that slippage on your actual trade, but once you have locked in some profit, it's safe to do so. Now, to qualify a trade, it is not enough to just have an entry zone, and all of you who are experienced with this should know that. You want to look at your high time frame charts as well to get an idea of what I call the preferred trade direction. I cover this extensively in my videos, in my articles, and the SD Zone user guide. And I would never take a trade without having aligned it with a high time frame chart. What I call a high time frame chart is anything that is 5 to 10 times the entry chart, right? So there's some elasticity there. In this case, the entry chart is this 5 minute here. So 5 times that is 25. Let's just go to the 30, which is 6 times. That's perfectly fine. That's within that 5 to 10 range. So we'll just change this to a 30-minute chart. Look at that. And you can see already on this chart that before, ahead of this this trade filling at 8 o'clock, we were sitting here, right? We'd formed this new demand zone. We popped out of there. That was overnight. That formed. Then we sat here for a long time, didn't do much of anything. But price had left this, and let me just maximize this after all. Price had left this, so direction was up. And that's one of the things you want to look for. If you're trading demand zone, you want to see that direction is up on the high time frame chart. And importantly, you want to see not only that direction is up, but that there is plenty of distance, plenty of room to the opposing supply zone, which at the time was all the way up here. So price had just left the demand zone. It was sitting here for a little bit. You were looking on this dip. That's really what that dip ended up becoming. I mean, of course, we didn't know that yet. But this dip was the entry, and direction was saying up, and there was plenty of room above. That's what made this an appealing setup. Not the zone itself. The entry zone itself was just a single bar zone over here. There wasn't really a particularly fantastic zone, but this high time frame chart really showed there was plenty of room to go higher, and price had already started going higher. That's what formed a great setup in this case. The next good trade this morning was this oil trade on the 15-minute chart. Let me show you that. We'll click on oil here. That'll take us to oil. All of these charts change to oil. On this 15-minute chart, you'll see this zone down here. And that's actually a zone. I painted this manually so you can see it because it had already been taken out later in the day. But you can still see where it was here at the time. Now, and it worked for about 7 to 1. Coming up here, I can show you that if I click here. Come on. And we click this line. I already set this to 7 so you can see it. We're about 7 to 1, Now, at first it popped quickly for a while, and then it just hovered for the rest of the day until it reached that level up there before finally coming down and taking out the zone. So this wasn't a spectacular trade, but I mean, hey, 7 to 1 is always a great trade. That's fine. Now, there's a couple of things I want to point out with this one. First, the location of this zone wasn't that great. If you look at all this trading to the left, let's do this. You'll see how we have all this trading over here to the left. So this zone really sat inside an area that had been traded extensively. Anybody who wanted to either buy or sell could easily get filled in this range here, and they did. And so that's not that ideal location in that case. It wasn't the worst I've seen, but it just wasn't ideal. So that's one thing that kind of was a little bit against that setup. Now, let me show you the high time frame chart for this, which perfectly predicted the exact trading pattern we saw here through the rest of the day. For a 15-minute entry zone, I use a 120-minute high time frame chart. That's 8 time, which is perfectly fine. You could use something else like, the 60-minute is a little too low, right? That's 4 times. You could use something like 90 or 75, but I just make it easy on myself and use the 120-minute, which is 2 hours. The easiest way is just to type 120 in this case, and that will change this chart to a 120-minute chart. And the one thing, as soon as TradeStation gives it to me, you'll notice is that at the time when this filled, and I don't know if I forgot to mention, this actually filled about half an hour after that CPI report came out. So again, the report was not in its way. That was not a problem on this particular trade. And at that time, it was right around here, price actually had left this demand zone here and started moving higher. All right. So it was already up here. So direction was up. So we had preferred trade direction up. That's okay. That's the first point. But how much room did we have to the opposing high time frame zone? See, we had that one sitting up here. So it already predicted that this was going to be a fairly narrow, congested trade, right? There was enough room up here. We could go, for 50 cents or so in oil. But then it came up near this, and it started moving lower again and then stalled down here. So this high time frame chart perfectly predicted what actually ended up happening here. We did get a nice pop, yes, 7-1, but it wasn't really the kind of trade you saw in the ES chart before, where it just rallied out of there. Admittedly, that was on a CPI report. Now, even if we go to something else, let's say we went to that 90-minute we talked about before, which is more closer to the perfect range. Well, that shows the same. It's still very congested, right? Or even if we go to the perfectly 5x, which is 75-minute, still very congested. So when you see this, this is a good time to say, hey, great entry zone, but maybe I'm just safer sitting on my hands, not trading this one, because I do not have a high time frame chart that really promises me easy money, and that is what I want. The last trade I want to show you, and the best trade today, was in natural gas, of a 3-minute supply zone. Let me just show you that. We click on the nat gas 3-minute here. That brings up 3, 5, 10, 15 minute nat gas here, and we have to maximize this chart to show it. And it is this little thing up here, and you may think, what the heck? Nobody had a chance of catching that, but they did, and I did. So let me show you this. So this zone formed pretty much right on. You see, this was 8 o'clock. Now 8:30 when the CPI report came out. So on the CPI report, we crashed from here. Then we were stuck for 3 minutes. I mean, why were we stuck for 3 minutes? That's incredible. Somebody was able to hold price for 3 minutes before it finally, collapsed further. That's how this zone was formed, right after that report. That's significant here. Now, and then a little later, about 12, 15 minutes later, it came back up and filled it. I only saw this because the radar screen gave me an orange new zone alert. That's one of the newer features in SD zones, that it will alert me beam when a new zone is formed. Otherwise, you probably wouldn't have any chance of catching this one. But what made this great was really when you look at it in the context of the high time frame chart. So let me show you that. In this case, we have a 30-minute, so we'll change a 3-minute. So I'll change to a 30-minute high time frame chart. Now, admittedly, that is a little bit on the high side, because that's exactly 10x, which is the highest I'll go. We could look at a 50-minute chart, and that will actually confirm the same thing we showed here. So even if you showed a 50-minute or 30-minute chart, will confirm what I'm showing you here. So what happened was, at that time, price rallied ahead of the report into this supply zone you see up here, started moving lower, and on the way down lower from here, that's when it formed that 3-minute zone that we traded, right? This zone right here. So we had, the earliest move out of this zone here, and then we had plenty of distance down to this opposing demand zone at the time. Of course, all of this happened later. We had this opposing demand zone down here, so there was plenty of room to that. So we were only just down here, and then price formed this new supply zone. The radar screen gave us a new zone alert, and for those who were lucky and fast, you could catch this trade. And of course, it was arguably one of the best trades of the day, depending on how far you went. I couldn't go any further than this, which is a high time frame zone. So I would always have my final target there in that case, unless I want to just trail stop a trade like this, which sometimes I would do. But of course, if you were sitting through it, that was past this. If you were sitting through it, you would have to sit through quite a bit of a chop before you got this big drop down here. So all I'm saying is this move from here to there was a good trade, not necessarily the whole thing here. I hope that makes sense. But once again, it was the high time frame chart giving us a perfect picture in combination with a perfectly fine entry zone on the entry chart. That was what caused or gave us a great setup. All right, a couple of trading lessons today before we head into the new features of the SD Zones release. Now, I bet you're thinking, why is he talking about these trades instead of showing us the new release? My answer is, I kind of am. This workspace layout, which we have used for many years now, has several limitations which get in the way of efficient trade finding. Whether you noticed or not, going over those trades illustrated these limitations. Think about it. We have 4 entry charts in this day trading workspace: 3, 5, 10, and 15 minute. The charts are relatively small in order to fit on the screen, so we frequently have to maximize them and scroll around in order to find zones and see what we're looking for, like we did with this natural gas trade we looked at before. So maximizing and restoring these screens all day long is one of the problems. That's problem number one. And that's even assuming that you already set up your right mouse button to automatically maximize and restore the charts. So problem number one. Next problem. We have radar screen over here scanning for 6 different intervals of each symbol. We added 2 more earlier this year in order to widen the net and find more trades. The top left of these 4 entry charts is symbol and interval linked to the radar screen, so that whichever row you click over here becomes what is shown in this top left chart. We did that by necessity, or out of necessity. So we have the blue symbol link, the yellow interval link, and that's matched to the radar screen. Blue symbol link, yellow interval link. So that's how, if I want to see what this 20-minute down or 30-minute down zone is, I click down here. Now, not only do all these charts update to Dow, but this top left chart becomes then the 30-minute chart so that I can see what that zone is. Down here it is. Oh, good. Oh, by the way, now I have to maximize again and restore it. That's a pretty nice zone, by the way. And restore it. So that's another problem right there. If you have a larger monitor, you can overcome some of these problems by using the variant of these SD radar workspaces that have 6 different charts. I call them QHD because they're designed for Quad HD monitors. QHD 6 chart. I can switch to one of them here. There we go. See, QHD 6 charts. So that one has 6 entry charts. 1, 2, 3, 4, 5, 6. And it shows all of the intervals. All right, very good. In this particular case, by the way, this is not a QHD monitor. So these charts look a little smaller than you would see them if you had a larger monitor. But the principle remains. Now, this is all fine and good as long as there's only one zone like this one here. Well, it's easy enough to catch it. But as you start going through the different symbols, you could easily find yourself in a situation where that's just a lot to take in, and it's a lot to always be looking at 6 charts and have your eyes find the zones that are on these charts. And it takes away from what was the purpose, the main purpose of SD zones, namely to do the work in radar screen and let radar screen direct you to where are the zones you should consider. So that becomes problem number 3. Let me get back to the regular 4 chart workspace here. Here we go. Now, the last problem I want to point out is that of the high time frame chart over here, which is set to have fixed interval that you manually have to change all the time in order to properly evaluate your entry zone, your entry chart. In this case, we were looking at this 30-minute Dow entry zone down here. In order to probably evaluate that one, we have to look at 5 times 30, 150. I can type 150 over here. That's kind of an odd interval. I mean, it's not impossible, like 2.5 hour zone. The more typical would be 180, which is a 3 hour. So that's what I use. So I would go to a 3 hour, 180-minute chart, and that's what I would look at there. That's easy enough for some numbers. What if this is a 175 tick zone, a chart, or even just a 240-minute chart? I'm not saying you can't do math in your head, but it is a little bit of thinking work, which I guess not unhealthy, but it's not very convenient, and is also not that consistent always. We want something that really makes for an easy trade finding workflow and an easy qualification workflow. And that's what this new release attempts to do. And let me show it to you.